Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. Our guest today is Dhiraj Agarwal, MD of Ambit Capital. Dhiraj, great having you. Thanks for taking the time out.
Thank you, Neeraj. Thank you for having me over.
Now, the pleasure is ours. Dhiraj, the first 6 months or first 7 months, if you will, have gone off rather well. India may not have been as good as Japan, but we've been decent performing a market in the last 7 odd months. For the remainder of the financial year or the next 12 to 18 months, do you reckon it's domestic factors which drive what happens to the markets here on, or would it be global factors which will largely dictate what could happen to EMs and thereby to India?
I think it's always a bit of both, but just to put the first statement in perspective, I think we have done well, no doubt about that. But as far as the global market performance YTD is concerned, it's at this point of time a sort of a middling performance from an index point of view is what I would say, right? So Nifty is a YTD almost 9%. Most markets in the world, or many markets in the world, have done better than us. So Europe is a 15 to 18%. Japan is about 20, as you rightly mentioned. Even US is up higher. US is also up about 14 or 15%. Nasdaq is obviously up 30%. So we end up looking at China a lot because the two large emerging markets at this point of time, and hence we look significantly better as compared to China. But if you actually look at a larger universe of global markets, I think we have done good, but not top of the heap. Except, of course, in case of mids and smalls. Mids and smalls is a different story. It's about 17 or 18% at the index level YTD. So that's doing pretty well. So all this excitement that we are seeing in the market at this point of time is largely because of mids and smalls doing well. So your second question going forward, so I mean, again, if you look at the headline index level up 9% YTD on the back of 4.5% in calendar 22, I don't think our markets are overheated. Our markets are doing okay. It's doing well, but it's not overheated. We will obviously keep on getting short-term pullbacks and corrections. But on the overall pace, I'm not that worried on a 12, 18-month outlook. I think the market should continue to trudge along.
Got it. If that is indeed the premise, how do you characterize what will lead the markets higher from where we are currently?
So it's largely earnings, I think, at this point. So while there is now a near consensus view that economically India is doing well, we are the fastest growing economy in the world. And even the bearish estimates or the not so bullish estimates on India's GDP growth is still not so bearish, right? However, the translation of our GDP growth into earnings is sometimes a little bit challenging. So, for example, see even the current quarter, about 850 to 900 companies have reported so far. And the sales growth is just about 7%. Now, for an economy which is growing 6 to 7 or 6 to 8 in real terms, and another 5 or 6 of inflation, one would have expected sales growth to be in the region of 12 or 13. So there is some sign, little bit of a sign of a worry there. So, which is why I said the markets may go into a little bit of a choppy phase in the near term. So, but the longer term driver of the market has to be companies' earnings and earnings growth. The GDP headline number itself and India's decade headline itself will not be enough to take the markets higher. We are optimistic about longer term earnings growth trajectory for India at this point of time, but we need to deliver.
Got it. The other way to think of it, I was looking at some of the other notes as well, but then people are fairly happy about the earnings in the sense the bottom line performance, and save for FMCG, the commentary around what could happen in the next 9 months from a sales perspective as well. Is that something to be slightly hopeful about, or are you guys a bit cautious about it, considering what you just said about what's happened in the first quarter?
No, we are certainly hopeful, but one also cannot ignore the small red flag or the small warning sign on the top line for the current quarter, right? So being optimistic and having a particular estimate is one thing, but ignoring the reality of what the numbers that we're ground is also not right.
most certainly.
So beyond that point of view, I wanted to raise that little red flag at this point that we need to be watchful of the top line growth. And you're right, at the bottom line, the numbers have been fantastic. And there's a very simple reason why. I mean, till about 4 or 5 months ago, WPI was raging.
Yeah.
And WPI at one point in time was higher than CPI by almost 10 percentage points, which basically meant that the margins of the corporate India was under pressure. Input costs were rising faster than the company's ability to reprice the end products. That is now completely reversed, right? So WPI is now below CPI by 700 basis points. So in few sectors less, few more, but we are seeing fantastic GRM, positive GRM or gross margin impact across businesses. And which is why bottom line is significantly better as compared to top line. So which will keep our market afloat for now, but for longer term performance, top line has to come.
Yeah. Okay. Yeah. So I was going to ask you that what happens if indeed we continue to see top line being sluggish, but because of the lower commodity prices, hopefully in the next 9 months, if the bottom line performs well. But I get the drift that you're making. So here's my question then. When you look at the last 9 to 12 odd months, because I'm sure you don't look at earnings only as a quarterly phenomenon, but even if you do that, I'm just trying to understand what has disappointed you, Dhiraj? Because the point that you raise about the revenue growth not being that great, I can see, for example, it very, very strongly in select FMCG pockets. We see that in IT, for example, and even in the banking space. In some cases, SBI, for example, the loan growth did come off a little bit. So what has disappointed you and what has positively surprised you?
So in the near term, the one big pocket of weakness from revenue growth point of view has been IT, as you rightly mentioned, not just this quarter, but it has been a weak for a few quarters in a row. And the question on IT is now the reverse, which people are asking, right? Is the worst behind? Because IT has been seeing a bit of a slowdown in revenue and earnings numbers and the earnings cuts now for 4 or 5 quarters, ever since the fears of a slowdown or recession started in the US. And in fact, now the narrative is changing in the US that US may be able to avoid a recession and go for a soft landing, although recent data is suggesting that. So actually the question on IT is reversing, but the question which is surfacing at this point of time is the early signs of domestic demand weakness that we are seeing. Is that temporary? Is that short-term cyclical? Or is there something more to worry there? So that is the thing more to watch for in the next few quarters. Banking is, I think, a little bit of, given banking has had a very strong growth both at the top line and the margin front for almost 2 years now. So a little bit of skimming off there, both in terms of either AUM growth or a little bit of margin pressure because deposit costs are now picking up and catching up with the lending rates is a given. And I don't think that's going to derail the markets or the performances in a big way. It's probably expected. So it's not a negative surprise from that point.
Okay. I would ask you that question, Dhiraj. Is the worst behind? I get very conflicting opinions on IT when I hear that, and people distribute their answers both into what could happen now over the next 12 to 18 months versus valuations, as also versus what could happen to pure play IT versus ER&D and versus even the internet companies. So just requesting you to tell us broad bucket, these 3 pockets, what is your sense?
So pure play IT, I think, will remain weak for some more time. The bigger question there is it in the price? Because the valuations have come down to their 5-year averages. And again, the debate there is why can't it go below 5-year averages? It's not that there's nothing sacrosanct about a 5-year average. In fact, in the 2016 to 18 period, IT stocks used to trade at a discount to Nifty when the growth rates were a little weak. They are still, after the corrections, have still come down to approximately Nifty valuations at this point. So it can go a little lower. Bigger question on IT right now is FY25, whether the growth rebounds or not. So, Ambit Research, IT analyst believes that 25 will also be weak. A lot of sections in the market at this point of time believes that 2025 will see a rebound. I can see a I can see a little bit of a short-term cyclical rebound in IT at this point because of the strong opinion that US may actually save recession, worst maybe in the price. But the big test for IT's longer-term performance, I think, will come in the December quarter numbers when the expectations for FY25 will start getting picked. So within the different segments of IT, relatively speaking, ER&D is better positioned. Internet digital plays are better positioned. The classic IT is where a bit of a struggle is there, right?
Got it. Okay. Okay. The other aspect is the how do I say, the resilience that some of the other the stocks of the exporting sectors have shown, Dhiraj. Bad results into pharma, bad results into spec chem, and the reactions have been not that bad, more so in pharma, but starting to see that in spec chem as well. What is your sense on some of the other non-IT exporting sectors?
So pharma is actually not bad. We actually like pharma quite a lot. So pharma, in fact, the US generic pricing decline is slowing down. It's coming to a more moderate 4, 5, 6% per annum kind of a level as compared to 10 to 15% that it was declining at. And this space will continue, right? I mean, that's the basic nature of generics. The reason you go into generics is that you get the price advantage. So 4 to 6% annual decline, the generics companies can very well absorb through productivity gains and volume gains. So with US generics bottoming out, we are actually very, very positive on pharma as a space. And bulk of the result that we have seen in this quarter, and maybe even the last quarter as well, actually reflect that view that US generic pricing is bottoming out, which is actually positive. So we are structurally bullish on pharma. Spec chem, honestly, I don't have an opinion. I'm not very sure what's happening there. As you rightly said, the extent of pricing decline in that space and the valuations in that space should have logically warranted for some more stock price cuts, but it's not happening. So I would bail out on that question. I'm not very sure what's happening in spec.
No, completely understandable. It's fine. But thank you for that opinion on pharma at least. Just a follow-up there. There are people who still believe that from a longer-term perspective, betting on the non-US generic exposed healthcare components, which is domestic pharma, or maybe even hospitals/diagnostics might be a better way. And there are people who specialize in cyclicals, and you can argue that pharma generic companies could be cyclical in nature. Argue that we are probably at the bottom end. I heard you say something to that effect. Would you believe that that will be a better pocket versus the other healthcare components?
I think so. Because US generics is coming out of a 7-8 year down cycle. I think the last peak that we saw for US generic facing business was probably 2014-15 or thereabouts. So it's been 8 years. So cyclical it may be, but after 8 year down cycle, when the cycle picks up, I think we might get a 4 to 5 year up cycle.
You like the commentary from the Sun Pharmas, the Ciplas, and the Lupins of the world?
Yes, we like the commentary.
You like the commentary.
We like the commentary. We see a sort of a justification of the fact that the US pricing decline is much lesser. We see a little bit of consolidation in the US generic space, globally, not just in India. And we are actually structurally positive in the US generic space for the next few years. So it's not just a short-term cyclical play. It could be 3, 5, maybe even longer-term play.
Okay. Thanks for that view. The other question is around the mids and the smalls, which you spoke about in your opening answer, saying that they have the ones who've done really good thus far. Some of the stories, Dhiraj, are very, very compelling. Now, you guys as a house have this reputation of coming out with some of the very niche small cap products in your reports for a long time now. Even currently, there are some very promising small cap names on which you have coverage as well. Are you skeptical of the move, or do you believe that there are promising names out there which will do well, even if the broader sentiment around small caps might just dampen out a little bit?
Small caps is such a diverse universe that when we have small cap and mid cap indices, which we track as a benchmark, but the whole universe is so diverse that sometimes I actually wonder if it makes any sense to track those indices.
Yeah, true.
Uh, I mean, if you look at the look back at the recent history, right? So let's say 2014 to 20. That period, by and large, was a tough period for the market, and by and large was a tough period for small and mid caps, right? Save and except 2016, 1 year when the entire small cap universe went into a bit of a euphoria. But despite that, if we actually go back and see, I mean, SRF was a mid cap in 2015, and the stock in that 7, 8 years time period is up, I think, 20 times. Tata Elxsi was a mid cap in 2014. So small and mid cap universe is just so diverse that we believe it's possible to find ideas which can deliver scalability and which can deliver sustainability in the small and mid cap universe in India at this point of time for sure and for a long time to come. It's such an undiscovered, or relatively less discovered space. So I wouldn't worry too much about the indices for the small and mid cap stock picking.
It's a very wide bucket though. What are you guys? I'm sorry, I'm using the term Ambit ubiquitously. There could be a difference between Ambit Capital and the sell side, but I'm using it ubiquitously. What is it that you guys like a lot relative to what these businesses or what these stocks have done? Because there is a lot of promise in a bunch of sectors which have come of age in the last 3-4 years, are still mid caps and small caps, but have rallied quite ferociously in the last 12 to 18 months.
Right. So, I mean, if you step back a little bit and look at the themes rather than individual names in the small and mid space.
Yeah.
So, there are 2, 3 very powerful themes. One is India is formalizing at a very fast pace. So, in whichever space or sector, and we have seen that happen in, let's say, paints in the past. We are seeing that happen in jewelry right now. And we are seeing in many different segments of building materials like pipes and tiles, etc., where the percentage of the informal segment was huge. The good quality formal players are actually able to continuously gain market share and grow at a pace which is significantly faster than the industry itself. There are good ideas to be found in that space. And we have seen that even in light electrical space in the past and continue to find some plug-in space, for example. So that is one. Second, in the small and mid space is a play on premiumization. So India's economic growth to some extent is K-shaped, where the upper part of the K is growing significantly faster than the declining or the flatter or the lower part of the K. And any businesses, and there are a number of them in the small mid space, which cater to that whole premiumization theme, we can find a good number of ideas in that space as well. Also, the rise of this whole revival of the capex cycle in India at this point, at least for this year and the next year, maybe another 2 or 3 years to go, has resulted in a good amount of boom in ancillary services, ancillary products companies with this whole capex cycle. So, machinery parts, making small equipments, which goes into bigger power plants, etc., small turbines. So that's another segment that is seeing a significantly superior growth, and they're able to find ideas. So there are various kinds of themes at play at this point. A few which are slightly mature, they've been playing for the last few years. Few which have probably started playing only in the last year and a half, and have a runway of another 4 to 5 years. So yeah, I mean it's still possible to find good ideas focused on these themes.
Got it. So before we let you go, Dhiraj, and maybe the next conversation that we do, whenever we'll plan it for talking about some of these. But I would urge you to give us some slightly focused answer in both of these, because these two themes are very widespread. Within capex, there are a bunch of things. Within formalization, a bunch of things. I'm not looking for specific names, but what is the first amongst equals into both of these? A slightly more focused, slightly an answer which can give better clue, if you will.
So we have research coverage on the sell side, and we have investments on the buy side in a number of formalization kind of things. So I will give a couple of specific examples since you asked me to be a little bit more focused and give specific examples out there. So, for example, Sapphire. We as a house have liked this company for a very long time. It's a clear play on both formalization and premiumization. So luggage, the organized players are taking market share away from the unorganized players, which is roughly still about half of the industry or 40% of the industry, but it's changing very fast. And even within the formal space, the consumers, especially the younger consumers, are preferring to go for style, for brands, not just for utility. So gone are the days when we would just look for a sturdy suitcase which can take the ruggedness of train travel, etc. Right? People want fancier looking bags because everybody's flying and you don't want to be seen. So it's a play both on formalization and premiumization. Similarly, we have seen in the light electrical space some of the better companies, and the new upcoming name that we like there is Bajaj Electricals. We don't cover Havells on the research side, but that's another fantastic example of both formalization and premiumization. So that's one space which is well underway. It's not a new theme. It's been playing for a while. But there is a long way to go because the informal sector is still quite large.
Got it. Viewers, please use this as an illustrative example, the whole thought process behind how people are flying more and not necessarily only looking for rugged luggage, as a way to think about how they have thought of the whole, formalization, if you will, kind of a theme as well. So please use that as an illustrative example and not as a recommendation by any stretch of imagination. Dhiraj, thank you. You gave us a bit more than what we had thought of. Much appreciate your time and look forward to talk to you more often.
Thank you, Neeraj. It was a fun conversation, enjoyable conversation. Look forward to interacting more with you.
Thank you so much. Much appreciate. Viewers, thanks for tuning in to this edition of The Talking Point.